Welcome to The Explainer. Today we're diving into a really big move coming out of Hong Kong. It's something that could completely change how millions of people invest in cryptocurrency, potentially making it as easy as buying a stock.
And that's the exact question at the heart of this major development in Asia. For a lot of investors, the kind of complicated world of digital assets might be about to get a whole lot more accessible and a whole lot more secure.
Okay, so first up, let's talk about Hong Kong's big move. The city is making a really bold statement here, and believe me, the entire financial world is paying close attention.
So here it is, the main headline. On October 27th, trading is set to begin for Asia's first ever spot Solana ETF. This is a huge deal. It was officially given the green light by Hong Kong's regulators just 10 days earlier, on October 17th.
And get this, the fund is being managed by a major player, China Asset Management. You might know them as ChinaAMC. It's going to trade on the Hong Kong Stock Exchange under the stock code 3460. This tells you right away this is a serious, mainstream financial product, not some niche experiment.
So, we're hearing all these terms being thrown around, right? Solana, ETF, spot. What do they actually mean? And more importantly, why is putting those three words together so significant?
First off, Solana. It's one of the world's most popular cryptocurrencies. It's built on a blockchain that's pretty famous for being super efficient. We're talking fast and low-cost transactions. It's often talked about as a huge competitor to Ethereum.
Next up, ETF. Now, this is a term a lot of traditional investors are probably already familiar with. An ETF is basically a basket of assets, or in this case, a single asset, that you can buy or sell really easily on the stock market, just like you would with a share of Apple or Google.
And here is the really crucial part, the word spot. A spot ETF means the fund physically buys and holds the real Solana tokens. This isn't some complicated derivative or futures contract. It means you get direct exposure to Solana's actual price.
So, what does this all actually boil down to for an investor? Well, let's compare the old way of trying to buy crypto versus this new, much simpler approach.
The difference is just night and day. The old way, well, it meant you had to figure out crypto exchanges, manage these complex private keys, secure a digital wallet. It was a whole thing. The new way, you just buy the ETF through your regular brokerage account. All of those technical and frankly kind of risky hurdles are just gone.
Now, let's dig into the details a bit. The ETF offers some incredible flexibility. You can trade it in Hong Kong dollars, Chinese yuan, and US dollars. It's got an annual fee of 0.99%, and, really importantly, the actual Solana tokens are held by regulated institutional-grade custodians like OSL and BOCI Prudential. That means the assets are secure. And this quote just sums it all up perfectly. It's all about getting that direct exposure to Solana without all the hassle of private keys and digital wallets. It is tailor-made for traditional investors who want in on crypto, but through a product that feels familiar and, of course, is regulated.
Okay, let's zoom out for a second and look at the global crypto race. Because Hong Kong's move isn't happening in a vacuum. Nope, it's a key play in a much bigger strategic competition.
And just to give you an idea of the scale we're talking about, just look at Solana's market cap. It's over $100 billion. Let that sink in for a second. This isn't some small cap experiment. We are talking about a heavyweight asset class. And the potential demand for this stuff? It's huge. According to analysts at JP Morgan, spot Solana ETFs could pull in around $1.5 billion in investments in just their first year. That's a serious amount of new money.
Now, this move puts a ton of pressure on other financial hubs, especially the United States. While the U.S. Securities and Exchange Commission, the SEC, is kind of dragging its feet on similar products, Hong Kong is just seizing the moment and moving ahead.
And make no mistake, this is a very deliberate, very strategic play. Hong Kong is basically planting its flag, signaling its ambition to become the #1 regulated hub for crypto investment and innovation across all of Asia. So finally, what happens next? With trading about to start, what does all of this mean for the future of investing?
Ultimately, this isn't just some niche product for the crypto-obsessed. It's designed to be a bridge. It's creating a safe and regulated pathway that could bring a flood of mainstream money from everyday retail investors and big institutions alike right into the crypto space.
And that leaves us with the big question, doesn't it? With Hong Kong making this move, the pressure is now squarely on regulators in the West. As Asia throws the doors wide open to mainstream crypto investing, will the US be forced to follow suit? This could very well be the first domino to fall in a massive global shift for digital assets.